morning, everyone, and welcome to your Daily Five. I'm Leslie Jouflas, and thank you, StockCharts, for inviting me back again. My website is trading live online if you'd like to visit or email me. Here's my email. Today, we are going to look at the gold market and we're going to look at the triple Qs, a pattern in that, and talk about that pattern. I'm going to show you some specific things that might be warning signs in that pattern. And then we're going to follow up on the S&P 500, the breakout. I presented that on March 31st. So we're going to talk about that chart as well. But let's start with the gold futures. And it looks to me like gold, the gold market, and stocks, ETFs related to it are getting ready for um, maybe a larger move to the upside. So I've got drawn in here, this is the gold futures. I've got drawn in here, this is an A, a B, a C, a D pattern. Now, right down here, where this light kind of blue line is next to this red line, this is what's called the D 1.0 completion. That's where this swing and this swing are about equal. And then we come down here. This is another completion of 127. That's where this leg extends a little bit longer. But we can see here that the price right here did not complete down here. Now, whether it will or not, I don't know. But there's another interesting setup with this, and that is that we have, it looks to be a double bottom, excuse me. And right around the beginning of March, it came down to this low, had a rally, came back and retested it, and now it's rallying off of those lows. Well, here we can see the RSI down below, and the RSI is showing strength. Now, this is not an actual divergence. It's not an actual positive divergence because the second low over here did not make lower lows. You have to have a lower low or a higher high for an actual divergence. But we can certainly see that there is strength in this indicator with this double bottom. So I would use the current double bottom right now as the risk area. And if the price were to exceed this low, then I would be looking down, a bit lower at some of these other levels. Now, I noticed today I put this chart on actually a little bit earlier today, and then I checked it just before we started, and it's up. It's up a little bit more. So now let's go take a look at GLD symbol. And here we can see that it has the ABCD pattern. And it just missed getting it. It came down to this 0.618 retracement and is also getting a rally off of it. And the RSI down here, we can see on that test of that low, the RSI was showing strength as well with that. Now the MACD is just starting to come to the upside here as well. But I want to show you, I forgot, I want to show you one more thing. Just a sec, let me go back to our original chart. I'm going to show you one more thing in here. So this is the gold futures. Even though this larger pattern did not get down to this completion, if you look right here, I have this second A, B, C, D drawn in, and that's not uncommon with a large pattern like this to see another pattern or other multiple patterns form within the main pattern. So within this CD leg, this ABCD did complete right down here where this double bottom is. So I just want to make sure that I pointed that out to you as well. Okay, now let's take a look at the symbol NEM, Newmont Mining. And this did complete as well an A, B, C, D pattern. And you can see that this completed it and moved off of the lows from that and has had a larger move to the upside than the futures market or the GLD spider. I've drawn in a trend line across here, and I noticed just a little while ago before we started that the price has broken above this trend line. I don't think as of right now, maybe it has since I've been talking, but if it exceeds this high right here at this trend line, I'd drawn in an ABCD buy pattern, maybe a retracement pattern, but if it exceeds this, then it's going to invalidate this pattern. If it stays at or below, then comes back down, then this buy pattern may still be valid. If not, then I would use, a possible trend line entry into this. The RSI down here, we can see that just off of those lows, the RSI started to climb higher with this, and the highs of the RSI right here just exceeded these last peaks. Again, that's showing us some strength. And the MACD, the MACD histogram that I have on here, that made some new momentum highs as well. That's a bit higher or right about where those last November peaks were. So again, to me, it looks as though the gold market and related ETF stocks, etc., may be getting ready for a larger move. And sometimes you get some back and fill with these types of things before they really get going. So I'd be watching for the retracement patterns. Okay, let's move on now to the Qs. And these are the triple Qs. Now, I want to spend just a couple minutes talking about this pattern. Oops, so sorry. This is a potential ABCD sell pattern here. That would be a Gartley pattern. And if price exceeded above where this 1.0, that would be a butterfly sell pattern. Well, the S&P 500 is at new highs, but the NASDAQ and the Qs are not, as you can see, at new highs. But it's interesting. There's some interesting things to note in this pattern. Um, and in the book, Trade What You See, How to Profit from Pattern Recognition, which is now available on StockCharts.com in their bookstore, we discuss the warning signs in these patterns. And gaps can be warning signs. And learning to monitor how a CD leg is formed is important, as it can give us clues to those possible warning signs that there's either underlying strength or weakness in a pattern. And this particular pattern seems to be showing that there's some underlying strength. And where these yellow circles are here, these are gap areas. There's even another one down here. So the C to D leg is forming with upside gaps to it. These bars right here, this bar closing on its high, a little doji bar, gap up, closing on its high, another gap, closing on the high, closing on the high. So these can be warning signs that either this particular pattern, the sell pattern here, may fail, or it may get, if it does get some sort of reaction to the downside, it may be just a very small reaction. Now, one thing that I like to use to monitor a pattern in this situation is I like to use this 0.886 retracement level right here. This is what I call the last chance retracement. And many times when a price closes above that 886, then the price will travel either to a test of the previous highs, the 1.0, and oftentimes exceed it. So sometimes that can give a clue that you may see price coming to one of these extensions. Now, another thing I'm noticing on this chart is down here on the RSI and also the MACD, you can see this pull back here. So this is a X to A, B, B to C. So our B to C leg formed an A, B, C, D buy pattern. And the RSI, look at how that held. That was, this is a bullish position in the RSI. And then this move above these last peaks is also bullish. And then the MACD here, we see where that red arrow is, we can see that the MACD has made momentum highs. So there is a sell pattern here, but you have to monitor the price behavior with these levels. And of course, sometimes a little bit tighter leash on the risk in a situation like that is warranted. Now let's move to the S&P to follow up. This is from the March 31st Daily 5 segment. And you can go back and watch that to get the full thing. But it talked about the levels of the breakout. The upside level was 3973 and a half area. And that's where the high, this bar here with the red arrow, that's from the FOMC meeting from March 17th. And many times these highs and lows of kind of spike bars off of announcements like that can be really great areas to watch. Is generally if they exceed it, they get stronger moves up. Here we can see on the lows, it exceeded the lows, got reaction to the downside. But we formed this range in here, and now we've had a successful break to the upside. And we can see a gap to the upside. I'm using a 120-minute chart here. Here's an example of what I was just talking about with the 886. You see right here, you see the long bar coming through and closing. Had a little bit of, testing up to the high, up to the 1.0, and then another close above, and then the breakout to the upside. So the other thing to notice on this is where we can see strength just by looking at the price is we can see these bars coming right through these Fibonacci extension levels. They're not getting any reaction, and then a gap and right through that 1618. That's a sign of strength as well. And the RSI down here, I had said at the time that if it's an upside breakout, we should see the RSI move to the upside. We're certainly seeing strength in the RSI. So I would be watching now for some pullbacks. We have a nice gap area to watch here as possible support, maybe back down around the 4,000 level. The 3973 now should be a main support area to be watching. So that's it for today's Daily 5. Thank you for joining me. Here's some information on a 12-hour on-demand course. And I will see you on the next Daily 5. Have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.